Natural gas.
It's Thursday, but that means it's natural gas day. That's right. We had oil yesterday. We got them on Wednesday. We get natural gas EIA inventories on Thursday at 10:30. And jump over to NADEX. We got the chart up here. So we're looking at the July futures contract for natural gas. We're currently trading at 296.26. So let's look at setting up some possible trades in here with maybe some volatility ahead of these numbers coming out. It's just about 10:20 right now. We get the numbers for the EIA in 10 minutes from right now. And the first thing I jump to are the 11 a.m. expirations. So the contract's trading at about 296.26, just over 296. We have spreads that line up with 295. So these are decent in that you're going to be paying very little intrinsic value. But what's interesting, like right away, I know this is a pretty large spread. I mean, see how that's costing you 298, and that's probably going to recalibrate, all right? But you might not want to be bidding for that at 298 when it's only trading at 296, right? For example, let's jump. So those are the 11s. I'm just going to jump right to it, because if you jump to the same contract, 297. That makes more sense, right? So you have, a bid offer that's basically straddling the underlying index, essentially, with a little bit of skew because the risk reward, but pretty close.
And you're at noon.
Yes. So with the noon contracts, here's your bullish spread. We have 295 up to 315, so you get 20 cents of movement. This one's going to be costing you $20 total. You're buying at 297, 2 pennies above the floor. And then on the bearish side, you're going to have 295 down to 275. This one being slightly out of the money, so no intrinsic value, all premium. It's costing you $8, so basically like 0.8 of a penny.
Right.
So $28 for both sides of that trade.
Not bad. 2.8 pennies.
Yeah, 2.8 pennies. So even call it 3 pennies of movement you would need away from 295. So you're looking for either 298 becomes break even or 292 becomes break even on the downside. And these give you till noon. And we get those numbers coming up in about 9 minutes.
So let's take a look at one of the charts. Where have we been thus far today?
Sure.
Okay, so, there's been a spread here.
Yeah. And, we're below, let's see where the low is, about 293.5. And just back
297. That's what it looks like, right?
Yep. We bounced up just 296.9. I mean, a hair under 297. So we've had some volatility. We had quite a surprise yesterday in oil with a draw of like 4 million barrels. So we'll see if we get some kind of surprises today for natural gas.
Welcome back, folks. So natural gas stockpiles rose 96 BCF. It looks like they were looking for, what, 91?
Yeah, 90 to 91, depending on Bloomberg survey had it 91. Median analyst estimate had it rising at 90. It comes in at 96 billion cubic feet. We'll jump back to the chart, see where we're trading. Get it over there. There we go. And quite a little drop. So when we pulled these out, the chart up, we were trading at 296 and change.
Yes.
And so we've spiked down about 2 pennies from that level on that news. Now, and we're accelerating as we speak. And let me just zoom in to get a better picture of where this is going. So what's a little bit tough is that if you had made both sides of this trade, you were starting with the heads up to the upside.
Yes.
Right?
Yeah.
So that's where the noon trade was going to cost us about $28. Call it 2.8 pennies, call it 3 pennies from 295. So we're already trading at 296 and change. You only need to get up to 298 to break up even on the positive side. You need to get down to 292 to break even on the negative side. I mean, what's always intriguing here is that this is your bearish spread. So this is the one with basically all the value in it right now because we're within that with intrinsic value. You could always be buying that back, take $15 off the table of your $28 investment, and then your bullish spread is going to remain active until noon if you do get a recoil above 295, which we're right up against that point. And, maybe if you are a little bit directionally bullish, right, or maybe you think that that's not too big of a number, that you might be looking for upside versus downside, just that you can trade this out throughout the day until noon.
Yeah.
And see what happens.
The noons it's nice having that extra hour, meaning specifically not doing the 11s and getting that extra hour.
It seemed to recently work out well in terms of we've gotten a lot of action even between the 11 and 12 Eastern time hours, even though we're getting the inventory numbers, whether it's for crude or for natural gas at 10:30. Man,
and in this case, the 11s really didn't work because the offer was too expensive, right?
Yeah. So the bid offer spread was pretty large there, and maybe that market maker just wasn't setting it correctly, but that's where, download the demo account, get used to it, and that's where, we pulled it up. We said, that's a wider spread than we're used to. We jumped to the 12s. We gained an hour at a more affordable price. Gotta love it.
Natural gas.
Yeah,
Well,
we'll check back in one more time. So it's almost 11 a.m., 10:55, and pretty much hanging at where we're at, or even rising from there. Now, if you were looking to make that volatility trade, your max pain, max loss would be 295.
Yeah.
And so that's not the area you'd want it to be trading to. But, you know, the numbers came in pretty close to expectation, right? 96 versus
Yes.
about 90 billion cubic feet. So not quite the volatility trade you would have looked for today, but there's always another trade.
Always another trade.
There you go.
Thank God there's always another trade.
You got it, man.